Sandeep, let's talk about your thesis for the market for India, because you're a top-down. What is the thesis for India from here, in your opinion?
So,
when I say India, I mean from a financial market point of view.
So from India perspective, if I look at Prashant, the way right from 2023, I said that years belongs to neglected zone stocks, most hated zone stock. If you really look at from a growth versus value debate, which keeps on happening globally, the cycle which started in August 2012, the growth at any price, that lasted till September 2021. Okay, the cycle peaked out. After that is the value thesis which has come back. Now I'm not saying that entire move is going to be a linear move. Okay, within that you will see some cyclical up move or cyclical downfalls also. But our portfolio is now more pro value. Why I'm saying that? Because
Which is hard assets.
Hard asset. Okay, we strongly believe that the perception which was there, okay, for these, if I have to, let's say in September 2021, there was a euphoria, and if you dissect the euphoria, you find the euphoria was in new age technology company, growth company, not in value, not in infra name. So I think that
but we've come a long way from there.
Yes,
right? I mean,
but still, this our view is that value as a thesis has a potential to last for a decade. It's a decadal view. Okay, and then look at the PSU moves. PSU is the classic representation of value thesis. They were beaten down.
Is that the highest weighted sort of space for you?
For us is a very large weightage. We are relatively
I mean, if you define by ownership, would you say PSUs are your...
Yeah, it may be closer to, some schemes are 18 to 25% of that portfolio will be in PSUs.
Okay. And do the moves make sense? And we're talking about banks, or we're talking about PSUs across the board?
We have banks also, but the percentage is very small as compared to 2 years back.
Okay.
Now, earlier 2 years back, the
so
banks...
So it is PSUs ex-banks largely?
Largely ex-banks, largely ex-banks.
But there also, I mean, some of the moves have been phenomenal. Railways as a sector, there's defense as a space.
We have a large ownership in railway stocks in our portfolio.
And you're comfortable owning them?
Comfortable. Because you have to look at the thesis which you are bringing. When something gets changed, okay, when you say one perception of the most admired territory gets shifted, the shift, even let's say 10% of the money shift from admired territory or the most admired stocks towards value stock, the money is very, very large. Like when I say, let's say, why I'm slightly more cautious on US, we always say that developed market risk appetite has peaked out, okay, and liquidity will shift. So how money shift from high risk to low risk environment. If 10% of money shift from US to Asia and India in particular, there is tsunami out here. Something similarly, look at in last many years, last 10, maybe 1 decade, a large portion of concentration was confined to these admired territory stocks. If 10, 20, 30% money shifts from that territory to this value as a thesis or neglected zone stock, there is tsunami, okay, and we are already witnessing that phenomena happening. And where is the over ownership, okay, as compared to 2 years back, they were neglected, hated zone, but they are still not reached the admired zone.
But valuation-wise, I was looking at names like RVNL, etc. Now they're trading at 40, 45 times
So I'm saying
earnings,
you have to do sector rotation, stock rotation. I'm not saying that one particular stock you have to participate. Like we were very early in PSU banks, we monetized that opportunity. Now we are somewhere else. So the sector rotation thesis, stock rotation thesis, you have to play to manage your risk.
But you're saying there is enough to rotate into.
Yeah,
because at sometimes one feels that rotation to सब तो हो गया, अभी कहाँ rotate करें?
I will not take the name. Look at the top largest PSU companies. I'm telling, if you look at top 3 in terms of market cap, where is the ownership?
Right.
The largest public sector enterprise, the free float is 3.5%.
Not banks, right?
Not bank. It's not a bank. But where is the ownership?
Okay.
Okay. As one of the large bank company available, not valuation wise very expensive. I'm just giving example. And similarly,
about ONGC and
they're Coal India, they're ONGC, they're LIC. Top 3 names are these 3 names you will get. Okay, where is the ownership in these names? On a relative basis.
You own all 3?
Yeah, we own all 3.
Okay.
Our portfolio is already disclosed, so we can talk about it.
And bullish about?
Yeah, we are quite constructive on this space. Okay. See, we believe mining, metal and mining as a thesis, which we started in 2023, I think will continue in 2024. PSU as a thesis will continue. So then you look at PSU and mining put together, and a PSU mining company will do even better, because overall PSU we are constructive as a theme. Then we are constructive on mining from a global perspective. We are very constructive. We think
I think Hindustan Copper is something that you own in your funds.
Yeah, it is one of the large holding in our fund in a small cap. We bought at very early stages, but we are holding it for last 3 years.
And that came off a macro kind of a call.
Yeah, for macro call. It's a call on EV, it's a call on copper. We took a call that copper will be in shortage. So how you play. Overseas investment you can't make given the restrictions right now. So we felt that Hindustan Copper was, let's say example, say, was the best space which was available. That's what we were holding for nearly 3 years now.
PSU defense names, you're out of it?
We sold most of them.
And banks as well, you've kind of
We have
gotten
pruned down. We have pruned down. We still have
Railway also you own, but you kind of are.
Yeah, but that
I mean,
railway
it's a
size
small
is not
size.
that big. Within the overall portfolio, the weightage is very tiny actually.
Right.
It cannot be very substantial from these levels.
Got it. What else? I mean, apart from the dire PSU kind of space.
We like pharma as a thesis. We were very early, right from February, March 2023. We have been saying the pharma hit the most neglected zone after what we saw in 2015. In 2015, it peaked out somewhere in March, and then
This is US generic.
US generic in general also.
Okay.
In general, I can say healthcare, but US generic in particular, if I have to talk about, that's a space I think has a lot of potential. That cycle actually bottomed out. So we are constructive on multiple data points. So that's a sector I think, if you ask me, valuations are not expensive. Okay, it is relatively under-owned. It has potential to give you a phenomenally better returns from the current level. So, and downside is limited.
Okay. What else? I mean, there's themes and sort of top-down conviction where stocks are also attractive. Any other areas?
I think consumption is also coming back.
Okay.
So consumption is an early areas which we are looking at now.
You mean low end, the lower
because
end?
rural economy is coming back. So I think with a lag effect, because if you look at last 2-3 years, consumption names have not delivered much. I think that cycle is bottoming out. We are looking at more data more closely to identify.
And what's the
some
best way
stocks.
to get exposure there? I mean, if that
Staple could be name, food companies could be a name you want to look at, but we are still working on it and trying to gauge. Maybe this quarterly number will give me more perspective, is not only from the festival point of view, but overall where the trend is changing. So next 1 or 2 quarter, will we be able to gauge the COVID effect which happened, or the logistic challenge in inflation which came because of the constraint on the logistics side. I think that's a easing out. If it eats out further, I think that's the one area which we
IT
think
services?
we are not negative on IT service, but only problem is that we are not very constructive also. Okay, so for us is the you will not lose money, but I'm not sure whether we'll make
You'll
big
make a lot
or
of money.
not. Okay, so
Because you're not very bullish on the US.
Yes.
I mean, as a
yes, we are not very bullish. We think the BFSI spending is coming down. So overall bench is very high. Body language of the the management on this space is not very good. So if I look at IT versus pharma, I think I'll prefer pharma over IT. Okay. The clarity is far better in pharma names. Okay, on relative. Yes, if you ask me whether downside is there in IT, I think our downside is limited. Okay, pharma is more volatile because of FDA related challenges. Sometimes you see unknown risk knocking your doors. So those are the things you have to keep in mind. But if you look at the larger bouquet, I think pharma is a basket.
is where you'll make more money as
Yes,
compared
we
to.
are very significantly overweight in that
One
space.
name which you, I don't think, have own in your portfolio is HDFC Bank. Or I mean, why is
No,
that?
it's not.
It's a-
Currently, we don't own it.
I mean, you used to own it.
yeah, we use it.
But private banks is something which, I mean, the street is extremely bullish on. Has been bullish for a while,
Yeah.
but that has not worked
Correct.
for some time.
So this is the same answer I'll give you. If you look at the pure valuation aspect, valuation was attractive. Everybody was talking about it. It was a very consensus trade for a while. But if you start looking at the risk appetite data or liquidity analytics for the sector as a whole, then you realize some of these names actually peaked out way back in September 2022 itself.
When you say peaked out, you mean
Reached out a peak. Okay, when I say peak out, not in terms of prices, like risk appetite was the highest between September 2022 till September 2023. So risk appetite has peaked out, which means there is no urgency to buy for anybody. Okay, liquidity cycle is actually shrinking. Okay, so if liquidity is declining, so it's a bad combination. See, other way, when liquidity cycle rises and risk appetite is rising, you make more money. When otherwise it happens, okay, so risk appetite peaked out, liquidity shrinking is a reverse combination.
Sure.
So that's the area we try to pronounce. So we maybe what? I think overall we have only 3.8% weightage in the banking as a whole, in the entire portfolio, depending on scheme to scheme. So we are grossly underweight on the banking side.
and that has worked wonderfully well for you.
So far it's worked very well.
It has worked.
But again, it's a data-driven approach, not on the.
And if the data
contra
changes,
part.
you will.
Yeah, we have no problems.
But as of now, it's not showing any signs of
So if you
changing or
ask me
turning.
from a near-term perspective, maybe we have seen a massive sell-off, so maybe pullback rallies can be there. But to take a decisive call, I don't think they have reached those neglected zone where we get like what was pharma in February, March, okay, or IT was in September. I don't think they have reached that phase where we will say go all out and increase the exposure. And again, it's a consensus trade, grossly overowned space. Okay, so anyway we don't mimic indices. So we are very active money manager. So I look at industry closely. A lot of people look at closer to the benchmark allocation. We don't do that.
Got it. Is the market in fine shape, Sandeep, or you think we should be ready for a little more volatile 2024? I mean, ups, not just ups, which everyone is just used to, and some downs as well along the way. What's your sense?
So let me give you larger thesis. We have been saying India, this decade belongs to India, maybe half century belongs. Manufacturing is a cycle. Larger thesis I'm talking about looks very good to us. Anything, and again, so manufacturing is a very large thing, manufacturing, infra, as a space is doing very well. But again, as compared to maybe 2023 return, because everybody was very skeptical in the beginning of 2023, and obviously returns are far superior, you may not get something similar performance. But we are still very constructive on the entire India space. I have been talking about that we are in bull run, very decisive bull run. We are still in bull run. But easy phase of bull run is over.
So you crossed the 50% mark.
Maybe in certain sector, maybe certain stocks could be answer is. But if I have to look at summarize in the thing, I think maybe in 2024, at least I expect 24,000 FT. That's sort of the minimum what I'm expecting this year. It's still a good growth.
Correct.
In terms of return perspective, is a good number. I don't think we have seen a stage which is very classically euphoric, where we need to be worried about. But stock rotation, sector rotation is the thesis which we play, and that really help us in reducing our risk.
As you said, the easy phase probably is behind us. Sandeep, it's a pleasure having you with us here on
Thanks for coming to our
CNBC-TV18.
office and covering us.
Keep delighting your investors. Look forward to more conversations. Thank you.
Thanks, sir.